Hi everyone, it's tax time again. So we are here today to provide some tax tips for property investors, for self-employed business owners, and if you're an employee, we're basically here to give you some tax tips to prepare for tax time for this year, and also maybe looking into next financial year, which is not too far away now,
it's coming.
to get ready for that. So it's Marissa here from Rise High, and we've got Amanda from Rip Watchman, and we are here talking tax time.
We are. It's already come around again.
Thanks for joining us, Amanda.
Hey, well, good.
It's hard to believe that it's already been a year since we last did this.
Yeah, it feels like yesterday.
It's just gone so quickly, hasn't it?
So too quick, but yes, I think everyone's in the same boat. Just time is flying.
So today we want to give you tax tips, as I said. It's obviously heading into the end of financial year now. We've only got a few weeks to go before end of financial year, and that also means that a new financial year is upon us. So let's talk about what's the most important things for self-employed business owners to prepare for in terms of this tax time, getting their tax return ready for this year.
Yeah, so this is a good lead in with the data matching that I was talking about for an individual. The ATO has a system called the Taxable Annual Reportable Regime, which allows basically anyone that uses subcontractors to report that to the ATO. So they're using business owners, basically making them disclose the wages or the contracting that they're paying individuals, and they're matching that data with the individuals and what their tax returns going through. So it's really important to make sure that if you are one of those industries, it includes the building industry is one of the main industries that have to provide this regime, but obviously IT, couriers, transport, they're also the other, and cleaning businesses, they're also all required to basically disclose any contractor and how much they pay, and the ABN, and if they're registered for GST, to the ATO. So all this information they're gathering to make sure that all business owners and all individuals are claiming and declaring the correct amount of income.
Yeah, so I guess that's sort of alleviating the possibility of cash payments in these industries.
That's exactly right, yes. They're trying to minimise the amount of cash that's going through. Even though it can't be eliminated, it definitely is being monitored very closely.
Yeah. Are there any other important things that business owners need to be aware of, to watch out for them?
For this year, it's really important to be aware that, whether you received ATO, cash flow benefits. So the JobKeeper obviously was received up until, I believe, March. So it's really important to kind of make sure that you're bringing that into account, as well as your job seeker. So a lot of people are getting caught with the fact that they did receive these benefits, and unfortunately no tax has been put away. So they're actually getting, penalised or having to pay additional tax because the amount hasn't been put away for them. So just being aware of if you have received any kind of COVID grants or the likes that have helped your income or cash flow.
There's also been a lot of other grants available following on from that, things like the apprenticeship schemes and other grants and subsidies that have come, beyond COVID. So would you say that it's equally as important in terms of declaring those and just making sure that you've put away tax? That's a really good one, actually. I hadn't thought of that because people wouldn't have really budgeted that extra tax that they need to pay on those grants. So they might find that when they get to preparing their financials and lodging, that they're a bit short of having to actually meet that tax obligation.
Yeah, and I think that comes down to actually reviewing and making sure your data's accurate and making sure that it's up to date. So that now you can have a look. You've got 1 month, you can have a look at how your profit and loss has gone, what you actually incurred, and what's your estimated net profit, to see what your likely tax position will be and potentially tax liability will be.
And I guess that's also a really interesting point, because in a lot of industries, a lot of businesses have been doing really well in the last 12 months, last 6 to 12 months, and it is actually, it can be difficult for businesses to estimate how much tax they need to set aside, especially as their revenue is growing and their business profitability is growing, because it may be that they need to set aside more tax than they have previously. So is this an issue that you find can come up and get people into a little bit of hot water?
Yeah, I think they just get a little bit shocked with how much tax that they potentially have to pay. And it is a matter of just being aware of what's going on and making sure that you're putting enough tax away, even if you're not giving. So we do have the PAYG instalment regime where people and individuals as well as business owners have to pay tax in advance for this year. That's obviously been fluctuating, obviously throughout the last 2 years because of obviously COVID. So it's making sure that you're putting enough tax away. And if you're not giving it to the ATO in that instalment regime, putting it into a bank and having it set aside, because you really want to make sure that you have enough tax or cash put away for tax time.
For those business owners that are going to struggle to meet their tax obligations when they fall due, I know that during COVID, the ATO was offering a little bit of leniency in terms of payment plans and due dates and things like that. Has that all finished now, or is the ATO still being fairly generous with their due dates and their payment plans?
Yeah, it's interesting. They definitely want people to communicate.
Yes.
Making sure that you're compliant and you're lodging on time is obviously a big issue with the ATO. They want to make sure that you're paying and declaring the correct amount of income. So the data matching's obviously all up to date, as well as what's going on with your situation. So they are issuing penalties. They are remitting penalties. So they are obviously able
for late lodgement.
For late lodgement,
Okay.
yes. So I mean, if you are lodging late or you have lodged late, you can request the remittance. They are generally quite reasonable. But if you're an ongoing late lodger, they do obviously keep those penalties, just to give you that kind of heads up that they're pretty serious about your compliance as a business owner.
And that's around lodgement, but what if you lodge on time, but then you can't quite pay the lump sum of tax that you need to pay straight away? What opportunities are there for those businesses to negotiate payment plans with their...
So the ATO is happy to have anyone call them up to organise a payment plan. They are actually allow up to 36 months if you need. Obviously, the sooner you pay off the amount, the better. I guess the key with payment plans is making sure that you pay all future tax obligations on time and lodge on time.
So that you don't continue to build up that tax debt.
Yeah.
And I guess from a finance perspective, having a tax debt does really limit your lender options.
Yeah, absolutely.
We find that most lenders won't look at an application for a self-employed applicant that has a tax debt. We do have some lenders on our panel that will, but it does really limit your choices. So I guess if you are going to be in that situation where you're going to have to pay more tax than what you're prepared to pay, we need to come and speak to us and speak to your accountant, speak to Amanda, to try and work out a strategy that's going to work from every angle of your financial situation as well as your future finance needs.
And I guess the other key is, if you do borrow to purchase or pay for debt with the ATO, you can actually claim that as a tax deduction. So if you do need to borrow a lump sum fund to kind of make everything up to date and fresh start, it might be an idea to come here and have a chat and get a broker to help you get yourself organised and up to date so you're not going behind is the key.
Yep, awesome. Are there any other things that self-employed business owners should watch out for?
I think for this year, it's really important to kind of just have a look at how you're going and what's going on. Make sure that your super for your employees is paid before the 30th of June. Otherwise, you won't get the tax deduction. So it's really important to definitely kind of process your pay runs and obviously get your super paid
before 30 June.
Yeah.
And also for your super, because many business owners don't pay themselves super unless they're an actual employee of the business.
Yes.
But that is one potential tax deduction that you could put some money into super. Is that a strategy that you find works well for a lot of business owners?
Definitely. It's definitely a good idea to do because it's an outright deduction. Straight away, it's instant and it's easy to calculate. So it allows you to be able to kind of put that money away and obviously claim the deduction. I guess the other key note is the fact that they've extended the small business instant write-off, so you can continue to buy assets up to 150,000 and write them off completely 100% in that first year if you wanted to. So that's another option.
We've had a question come through from Sophie. Sophie asked, what are the tips to make next financial year the best one tax-wise as a business owner?
Yeah, well, I guess the key is to look at what's going on in your business and what do you want to achieve. Having the goals and strategies set for the next 12 to 2 years is really, 12 months to 2 years is key to kind of have a plan of what you want to achieve for the business. You obviously want to grow the business and obviously achieve the results as far as the profitability is concerned, but then what about your staff? I mean, they're talking obviously with the Labor government, they're talking about wage increases and the cost of having to pay employment, which is going to increase, which is going to obviously reduce that bottom line. So
and there's also
planning.
going to be increased superannuation guarantee
Yes,
as
yeah.
well. Does that increase
Yes,
next year?
That's coming on the 1st of
1st of July. What does
yeah.
that increase to?
And it's 10.5%.
10.5%. So
Yeah.
that's already going to lift staff costs.
Yes, without
any wage increases.
Yeah, so it's really important to kind of plan what you want to achieve for your business, and then obviously what your goals and I guess your standards are set for what you want to achieve basically in the next 12 months.
There's a few. I always find that it's really useful for business owners to sort of map out their budget for the following year and what they think their profitability is going to be, and then have a strategic chat with their accountant up front. Say this is what it's going to look like. What can we do to improve our tax outcome?
Yeah.
And there's a couple of things that came up in the budget that I'm particularly excited about, which I think will benefit a lot of our clients who are business owners, and that's the investment in technology, investment in IT, and also the investment in training and development for their employees.
Yeah.
And so, can you just explain those two things in a little bit of detail, and also let's start with those things, and then
I guess the ATO kind of is trying to push individuals and obviously small business owners the ability to be able to kind of improve on their infrastructure and obviously their standards as far as their IT processes, and individuals, because individuals make the business run, and they're the key in the heart of how you can function. So the ATO has kind of said that they're wanting to allow businesses to incur the costs associated with the IT and obviously with the labour side, training and getting the skills back into the business. And you can claim the deduction obviously 100%, but then you're also getting an additional tax offset when you lodge your tax return, which will obviously reduce the bottom line as far as your tax liability is concerned, which is a really good incentive for business owners.
So would you just, what do business owners need to do to take advantage of that? Do they not just need to keep a schedule of what they're spending and maybe receipts to accompany it of what they're spending on tech and what they're spending on staff training?
Definitely. I think if you're using an accounting program or online program, keeping those costs separate from the other business costs is a good idea. So you're always being able to go back and prove what you're incurring for the IT, the training, to be able to kind of claim that separately in your tax return when it comes to tax time for next year, which is really good.
Yeah. Hopefully that gives you some tax tips. I guess one thing that I would say from the finance perspective is that when you are doing your tax planning and making sure that you want to have a great year from a tax perspective, you also need to balance off what impact that's going to have for you from a finance perspective. Because obviously, the accountants love to save their clients as much tax as possible and pay as little as tax as possible. Whereas from a finance perspective, the banks want to see that you've actually paid or made a reasonable profit and paid the reasonable tax from that profit in order to have a borrowing capacity.
Yeah, definitely.
So it's really important to balance that fine line. What I would say, Sophie, is that when you are planning for your financial year and what sort of tax position you want to end up in, I would be speaking to both your accountant and your mortgage broker about where you can actually get it from a tax perspective and how that might impact your borrowing capacity, so that you can be really confident that you're paying, as little tax as possible, but still giving yourself the freedom and flexibility that you need from a borrowing capacity perspective.
Yeah, definitely. And the other thing that we're doing currently is obviously tax planning for 2022, but doing the comparison, spending the money, what type of tax savings will it provide you? Because, you don't get a dollar for dollar with obviously deductions. So if you spend $1 on the business and you want to claim that deduction, you may not necessarily get the tax benefit of $1. So you really need to do those calculations, see where your net profit is and what your actual liability is, and then do a comparison of the spend. If you're not going to get the dollar, it might be just better to actually just declare the income and then next year claim it against the income.
And this is where that strategy chat I think is really important.
Definitely.
Do you find that helps a lot?
Definitely. It gives people a good idea, and obviously it's a good review of what's going on before the 30th of June. So you have time to be able to plan for what you want to do and why. Some clients don't want to pay, don't want to claim their small business asset write-off because they don't need to. So making sure what is going on in your business is specifically designed for your tax side to benefit you guys is the key. So definitely tax planning and strategies are a good key way of making sure you can still grow, be compliant with the ATO and save tax.
Absolutely. And I guess for those of you who did take out extra small business loans or business debt during COVID to help manage that process, making sure that you're incorporating the interest that you've paid on those loans.
Absolutely.
Because sometimes they can get missed off the accounting software. So making sure that you're adding that back in will obviously provide a true reflection in your financials and boost up those tax deductions as well.
Definitely.
So in terms of self-employed, are there any other tips that you've got for them in terms of, we've already spoken about a lot of tips of maximising their tax savings for this year, like putting more into super, paying the super for the employees early before 30 June, documenting all the expenditure on tech and training. Are there any other tips that you can give to self-employed to maximise this year and also plan for next year?
Really depends if you're a cash or accrual basis, but if you are invoicing and you're on a cash basis, potentially if your income's high and you don't want to have that additional tax and you have the cash flow, postponing issuing your tax invoices for this month is good. Wait until the 1st of July so the income doesn't come into the bank account and you don't have to declare the income. Another good way is obviously prepay. So you can prepay rent, you can prepay insurance. So looking at those type of costs that you can potentially pay now and get the benefit later is another good strategy as well. It all comes down to cash flow. So I definitely suggest you don't do it if you're going to be in a tax issue or tax cash flow issue next month. You don't want to have to make sure you've got no tax or limited tax and then have cash flow problems. So really review what's going on and try and minimise as much as you can, but without a detriment to the bottom line or the business cash flow.
So there you have it. That's the tax tips for self-employed business owners. We at Rise High are always here to help you out, and Amanda at Rich Watman is always happy to help out as well. I believe, Amanda, you're happy to provide a checklist to our viewers.
Yes, I've provided that.
So we will have that in the blog and the comment section below following the post. And we'd really love to help you in any way we can, whether it's around your finance or preparing for tax time, end of financial year, beginning of a new financial year. We are here to help you, and thank you very much for your support. Thanks and have a great day.
Thanks.
Bye.
Bye.